Welcome to the podcast. Today we're diving into investing in IPOs, their intricacies, and the added layer of Sharia considerations. Let's kick this off by discussing what exactly an IPO is.
Absolutely. It's like the process where a privately held company goes public, right?
Yeah.
Essentially, the company offers shares on a stock exchange for the first time.
Exactly. And here's the interesting part. The company decides on the number of shares, and an underwriter gets involved to handle the pricing, drumming up investor interest, and even buying any unsold shares. It's a pretty sophisticated mechanism.
Right, this underwriter role is so crucial. It ensures the offering goes smoothly. But I'm curious, when we talk about getting in at the IPO stage, how do we really know if that's a good idea?
Well, it's a mixed bag actually. Investing in IPOs can be very exciting, especially seeing success stories like Coinbase or Airbnb. But it also comes with plenty of pitfalls, so it really depends on various factors.
Yeah, I mean, on one hand, early investors often see huge returns, but if you miss out on that initial opportunity, you're sometimes paying a premium on day one, right?
Exactly, and that's the rub. If you didn't land the shares at the IPO price, you might end up buying at a premium in the secondary market. It's like paying more for a fresh off the oven pastry because you missed the line.
Right. But isn't there more to it than just timing your entry? What about reading all that prospectus information?
Absolutely. Reading the prospectus it's like super important because it lays out all the risks, opportunities, and the company's financial strategies. It even shows whether the firm is raising capital to fund growth or simply to cover expenses.
So the prospectus gives you the full picture. That makes IPO investing feel a bit like detective work, doesn't it?
Yeah, it's like you have to be Sherlock Holmes with these investments. You need to check for red flags, like if the company is desperately raising funds to cover shortfalls rather than really pushing for expansion.
Yeah, absolutely. And let's not forget about watching what early investors do after the IPO, right? Wait until after the lockup period ends.
Exactly. That lockup period is key since it restricts insiders from immediately selling. Their actions post-lockup can tell you a lot. If they hold their shares, that's a strong vote of confidence.
It almost feels like you're reading body language, but in the stock market.
Totally. And then, there's the different ways to invest in IPOs. For instance, besides the public market, you have employee stock options.
Oh yes, that's a neat advantage. Employees sometimes get shares at a lower price. But what about those of us who aren't insiders?
There are several channels. Startup investing is one where you can provide seed funding or get involved through public crowdfunding platforms like Seedrs and Crowdcube. It really democratizes the investment process a bit.
And then you mentioned venture capital trusts and angel syndicates. Those are really interesting for early stage Shari'ah-compliant startups, right?
Yes, exactly. For those wanting to invest early and maintain compliance with Islamic principles, these avenues can be golden. For instance, platforms like Curate Capital, where they source Sharia-compliant startups, can be very appealing.
But here's a critique I sometimes hear. Isn't it a bit too risky to try and time these early entries, especially when companies like Lyft show such volatile behavior post-IPO?
That's a fair point. You see, even with big names, there's no guarantee. Take Lyft, for instance. It shot up on its IPO day, but then crashed down significantly later. It's a reminder that high volatility is always lurking in the shadows.
Right. So how does one balance the potential for big returns with that high risk?
The key is due diligence. Assess if the overall valuation is reasonable, determine if the company's growth prospects are solid, and be very cautious about the hype that surrounds these IPOs. Diversification in your portfolio also plays a huge role.
Yeah, absolutely. Speaking of which, how do Sharia considerations fit into all of this?
Good question. With Sharia, it's crucial to ensure the company's core business and financial practices comply with Islamic principles. That means no involvement in prohibited sectors and a proper check for things like excessive uncertainty or gharar.
And then there's the issue of day trading, right? It seems like a lot of enthusiasts try to swing trade IPOs for quick profits.
Yes, exactly. And that's a major red flag from a Sharia perspective, because day trading often involves speculation and doesn't truly involve ownership. It's a slippery slope, and for those following Islamic finance guidelines, sticking primarily to straightforward stock ownership is advised.
Right, indeed. So to be Sharia compliant, you should avoid derivatives like options or warrants, unless you're an expert in their fiqh.
Precisely. For most investors, especially those just starting out, the safe route is to invest in plain old shares. Anything more exotic might fall into a grey area unless you have sound scholarly backing.
Yep. And what about SPACs? They seem to be getting a lot of attention. How do they align with the Sharia framework?
SPACs, or special purpose acquisition companies, are a bit of a different beast. They function as shell entities to raise funds and then merge with a private company. But their structure poses unique Sharia challenges due to uncertainties around the merger and the period when the entity is essentially holding cash.
It sounds like they have more room for speculation, which could conflict with Sharia principles.
Exactly. The uncertainty involved means extra caution is warranted. That's why many investors who follow halal investing principles opt for the traditional IPO route instead.
Right. And then we also have direct listings. They offer a slightly different model compared to the usual IPO.
Yes, direct listings are so interesting. Companies go public without underwriters determining the price. It's like letting the market set the pace from the get-go. This can level the playing field, but also introduces unpredictability.
I mean, with direct listings, both big names like Coinbase and Spotify have taken that path. But doesn't that unpredictability make investors nervous?
It can indeed. Without the underwriter's cushion, the initial day can be very volatile. Yet for some companies, it can also lead to a more balanced market debut in the long run. It's really a trade-off.
Yep, that's an interesting trade-off. So, in summary, there's a lot that goes into investing in IPOs. The valuation, reading through prospectuses, understanding market conditions, and of course, ensuring you're on the right side of Sharia rules.
Exactly. IPOs can be a great opportunity, but they're not for the faint-hearted. Due diligence, a long-term perspective, and a diversified strategy are all essential.
Absolutely. And I suppose the bottom line for those interested is get in early if you can, be wary of the hype, and always cross-check Sharia compliance if that's important for you.
You're spot on. It's about balancing potential rewards with the inherent risks while staying true to your investment principles. Each method, from employee options to secondary markets, has its pros and cons.
Yeah, there's a lot to unpack and so much nuance that really calls for careful reading and analysis. It definitely gives us a lot to think about before jumping into any IPO.
Exactly. And for those who want to dig deeper, resources like halal stock screeners and comparison engines are invaluable. Always remember, it's not just about quick gains, but sustainable, ethical investing.
Well said. It's been a great discussion, informative, engaging, and yes, a bit of a reality check on how something as exciting as an IPO needs to be approached with caution.
Absolutely. And as always, staying informed, questioning the hype, and consulting multiple sources will serve any investor well, especially under the Sharia framework.
Thanks for this deep dive into IPOs and the finer details around halal investing. I've definitely got a lot to mull over now.
Thank you too. It's been a pleasure untangling these layers together. Until next time, keep questioning, keep learning, and invest wisely.